Now to bring on board Ratnesh Kumar, Managing Director with StanChart Securities. Ratnesh, morning. Thank you for joining us. After the Union Budget 2012 at StanChart Securities, have you changed your FY13 EPS estimates?
Well, the analysts would still be working through numbers, but my sense is that the changes that you've had would have a marginal impact, probably marginally on the negative side if you look at some of the sectoral earnings which might get impacted, some in pharma, some in oil. But net-net, the thing about budget is that I don't think it changes much for the market or specific earnings, and we move on.
Ratnesh, what about flows? Do you think, from an FII perspective, this was much of a non-event and money inflow will continue into Indian equities?
That it should, because if you look at last year, India was probably one of the worst performing markets. So lower valuations as well as the fact that we're starting a new year and some amount of bottoming out was being expected or still being expected in the macro side. And of course you've had the global liquidity factors driving liquidity into emerging markets, and we've got a good benefit of that, and I don't see why that should change because whatever the budget might be, I don't think that is going to start a new downgrade cycle in terms of earnings. So you're looking at 10% earnings growth in FY13, and that should broadly remain unchanged. And with that being the case, and the fact that globally liquidity is still being pumped in, I think my sense is that you should have global liquidity continue to support the market.
So at a time when you are confident that global liquidity is here and global liquidity will support this market on every decline, which are the best stocks and sectors to buy? High beta?
Well, of course, because whenever you have liquidity as your main underpinning for the market, liquidity is coming in, A, because of global factors, B, also because of an expectation that as you get into the second half, some amount of macro recovery will begin to set in. And to drive that expectation, you also have possibilities of rate cuts, which could start from next month itself. So that in that scenario, higher beta sectors, financials, those are the sectors which would be the ones to own in the next few months.
Ratnesh, if I look at the total inflows for the year, for the current calendar year, it's about $9 billion. But if I look at the profile of long-term investors who have sold stocks, Citi is out of HDFC, Temasek is out of ICICI Bank, UBS is out of Kotak Mahindra Bank, but we still have a fat number of $9 billion. So at a time when genuine long-term investors are selling, who's buying India?
Well, the HDFC sale that you talked about, I mean, that actually resulted in FII numbers getting increased, but there was no corresponding sale number which got adjusted because that was a strategic sort of a holding. But net, if you look at some of the sponsor shareholders, right? I mean, private equity and those types of investors, there has been a huge lag in the last 1 or 2 years where some of these sponsor shareholders could not get out or liquidate some of their long-term holdings. So the fact that the market has come back, there is liquidity in the market. Some of those investors are using that opportunity to liquidate some of those long-term holdings. But broadly, the money that you're seeing coming in is from a wide variety of foreign investors. Obviously, there is an ETF component, but there is also regular long-only money which is coming in. One of the areas where you've still not seen any money yet coming into those type of funds and hence coming into India is on the hedge fund side. And that's the only one which is a bit on the non-existent side, and of course you've seen in this inflow of foreign money, you've seen actually some selling by the domestic institutions.
So Ratnesh, what could be the next trigger point for the market now that we're done and dusted with the budget as well and it's turned out to be a non-event? Do you think it is going to be a rate cut by the RBI, and if so, what is the quantum that the market is now expecting?
Well, obviously, the rate cut becomes a major sort of point for the market over the next 3, 4, 5 weeks, simply because you've had the budget come and go, and the way I would look at the budget is clearly the week prior to that, all the events which were happening. The main positive thing about the budget is that you didn't have a whole lot of populist things which the market might have feared. So it's done. I think we've seen already trends in the last 5, 6, 7 years that a lot of the reform actions, things which might be difficult to push through in the legislature are done outside of the budget. So we still should not cannot lose hopes on those. And so some of those reform activities can happen in the coming months outside of the budget. And for the rate action itself, the focus, I think what the market is banking on is that the focus will shift towards revival of growth. We've had a pretty slack investment cycle in the last couple of years. Investment activity has been slowing down. And if you look at history of the Indian economy over the last 15, 20 years, consumption growth is one steady factor, but periods of high economic growth are essentially driven by high investment growth. So the rate action will increase the market's confidence in the fact that there could be revival of the investment cycle, which is why I think that is probably the most important thing for the market to watch out for.
So after a 15% run-up, where are you confident that if you put in 100 rupees in a stock or in a sector, you will get 120 back after 1 year?
Well, I think you could be looking at financials as one sector. You could be looking at some of the infrastructure names which were like fairly bombed out, have had some recovery, and could recover some more. And broadly for the market, if you're looking at next 12 months, you're probably going to get back into double-digit earnings growth. This year, FY12 was ultimately ended up with almost zero earnings growth. So I think going forward, if we get back to double-digit earnings growth and some amount of re-rating that the market has been seeing after a pretty horrendous 2011, all in all should give double-digit returns to the market overall, and within which we can find pockets which can be better than that.
So let's nail it down to some names. Let me define the time frame. Next 12 months, you define the market cap.
Well, I mean, I think right now it's still time to be with the large caps, because when you have liquidity factors driving the market, you should see, especially foreign liquidity, it tends to find its ways into larger caps. So I would say some of the private banks, be it an HDFC Bank, Axis Bank, or even in the technology side, you have the Infosys earnings event, which is out due in the next 1 month, which is also going to be an important data point for the market. Our expectation is that the company is doing well, and the guidance should be good. So Infosys would be another one.